Bring in Evan Lucas now, the Chief Market Strategist at InvestSmart. Evan, always good to get your thoughts. The ASX seems to be soaring at the moment. What's behind all of that?
Yeah, good morning, Peter. Good morning, Laura. I think this is the way to probably explain what we've been talking about for the last almost 2 years in terms of what's going on, because not only is it soaring, made a new record close yesterday. Earnings actually, we're halfway through earnings season as we speak, are actually being slightly weaker than probably what was expected. But as you said, they're soaring, and the reason for it is that we saw a 28% of companies reporting so far have beaten by over 2% their dividend yield. And what we've been talking about for a long, long time is the fact that everybody in term deposits or in fixed income of some description, with the fact that the RBA's got record low rates, it's not just here, it's all over the world. The amount of money flowing from those kinds of areas into equities has been ginormous, and they are chasing better returns, and realistically they're chasing the kind of yield that they've come accustomed to and expect from their day-to-day operations. And so companies have given that to them. Look at BHP, record outpay they've had. If you have a look also with what Fortescue did yesterday, same thing. It's all that idea that money is flowing there, not necessarily because earnings are great. In fact, it's the highest price to earnings ratio the ASX ever had. It's also the lowest yield it's ever had. But more and more money keeps going there because there is such a difference between what investors inspect and what the market is doing. And particularly because we've got such low rates, it's therefore forcing people into areas they may not necessarily want to be, but are having to go.
Well, that's the good news. I hate to bring the mood down, but will there be some outliers today? We're going to see some numbers when it comes to jobs back in January, but also I think Qantas is reporting today, isn't it? Yes,
it is. I'll probably start with Qantas before I get to the other part in terms of where we sit there, Laura. Expectations are for a slight decline in numbers. That's not surprising. Their international business is one that we knew was under a little bit of pressure. They won't tell you yet the impact of Corona, but they will certainly put it in their guidance for what happens in the second half of the year. So these are numbers to the 31st of December, whereas Corona obviously really ramped up. It will be effective. There will be a hit. We know that Qantas has told us that if it was to really, really keep going the way it was, it could be as bad as $200 million to their bottom line in terms of the travel shutdown. So that is what you want to hear from Qantas today. So I'll get off that. They're not out yet, but they are coming up. They're probably about an hour away in their release. Jobs numbers. No, there probably won't be, Laura. And this is the other thing that's starting to really come out from the wildfires. As horrible as they were, the actual impact so far on the economics has been minimal. And that has always been the argument, because they are in areas that don't have high levels of employment. They are not high levels of industry. So the employment numbers today should actually be taken as trend. They should therefore be read as, you know, the norm that is going on, even with what happened in January in those horrible, horrible seasons. So expectation, 10,000 jobs created, but for the unemployment rate to tick up again to 5.2%. It's not what the government needs, nor what the RBA needs.
All right, Evan, just quickly, we've got about 30 seconds left, but wages growth, can you give us can you give us your view of that?
Yeah, it's as expected, so it actually fires into it today. The underemployment and the underutilisation, so that is those that are employed that want to work more, and then the underutilisation is those that are unemployed and underemployed combined. It has not moved. 13.4% of the population that is able to work still cannot get the kind of level of work they want. And until that moves lower, then wages will go up. And that's the problem, is that is the slack we keep talking about. And unfortunately, it's still not moving. Now, very quickly, we are getting jobs growth. It's just that for every one job we create, a new person comes back into the jobs market. And it's basically a nil-sum game. So that is the problem at the moment with the employment market, is that we just cannot absorb the slack.
Nil-sum game. All right, yeah. Good way to put it. Evan Lucas, as always, appreciate your insight. Thanks so much for talking to us again.